So Zia, you would have given me 15% tax-free. Only condition I should have been an NRI. But let's come to that in a bit.
I think IDFC First has always believed in simplicity. What can we communicate most easily to customers?
6.75. Yeah. ये तो रुपीस में भी नहीं मिलता.
It's a very good point. In fact, our savings account rate, which also is higher than most banks in India.
You were known for your savings account rate.
We are paying 6.5% in INR terms, right?
Why is the bank lending money to me? I may not be that credit worthy. I may not be able to stomach 9 times leverage in a normal life situation. So how is this happening?
Yeah, so there are two parts to this. One is the bank, one is the customer. From a bank point of view, it's a fully secure loan.
This is important. People keep thinking EMI padega yahan pe. Hello and welcome to the Thefynprint. I am with Zia Huq, who is head of NRI banking at IDFC FIRST. Welcome, Zia.
Thank you, Neil. Pleasure to be here.
So, Zia, you would have given me 15% tax-free. Only condition I should have been an NRI. But let's come to that in a bit. First, let's understand the product, which is FCNR, Foreign Currency Non-Resident Account. Can you tell us a little bit more about these accounts? Typically, what kind of interest rates are there?
Great, sure. I think I'll just take a step back, Neil, if you don't mind. I think an NRI is permitted to hold both INR and dollars in India. Traditionally, they've had INR savings accounts and INR deposits. Dollar deposits have always been available through what is called the Foreign Currency Non-Resident Bank Scheme, which is FCNR B. And it's been there for more than 2 decades now.
That's what B stands for. I used to wonder forever.
Because there used to be an FCNR A, which is
Exactly.
discontinued many years back. But this has traditionally been a method for NRIs to keep money in foreign currency and earn interest and obviously the principal back in foreign currency. And it's been a traditionally popular option for NRIs for more than 2.5 decades. RBI has had multiple versions of and updates on the rules. Right, they've benchmarked the rates banks can offer against what was LIBOR originally, and now it is the benchmark that's available, which is SOFR.
Sorry, so LIBOR is the London Interbank
It
rate,
was, right?
and
now it is the benchmark rate, which is your SOFR rate and other benchmark rates. So RBI specifies that this is the maximum you can offer, 200 basis points, 300 basis points over the benchmark rates. FedI publishes these rates every month, and banks technically know what is the maximum cap they can offer. However, over the last, I would say, almost a decade, pricing has not supported banks to offer rates close to the ceiling. So most banks have priced it basis their own liquidity requirements. So rates have hovered much lower than what the maximum rates allowed by banks.
Yeah.
Primarily because whatever a bank raises in dollars, for example, they need to make available in INR for lending to for the asset business in India.
So banks
they
are
need
borrowing in dollars and they
need
are
to borrow in dollars and then they
lending
need to,
out in rupees.
and then they need to obviously hedge that exposure because they need to pay back dollars to a customer on maturity. So that's why prior to June, most banks were offering rates between 3 to 4.5%, primarily because the landed rupee cost was close to 7%, and which is what most banks are willing to pay for rupee deposits in India, right? So I think what the RBI did in June is that saying, hey, banks, please go and raise deposits. Whatever the hedging cost, we will bear. So that completely eliminated about 2.5% of the cost that banks bore. So banks were able to raise their rates from 4 to let's say 6%. And bank like IDFC, for example, we were able to raise it to 6.75% because that is obviously the price that made sense for us as an organization.
We must thank RBI then.
This is definitely RBI's, I mean, to the credit, because I don't think a bank can take credit for offering a higher rate. Would not be possible without this scheme. That's part one of the scheme. Part two is that there are certain statutory obligations like SLR, CRR, which all deposits you raise through the scheme are not required to be maintained. So that also adds a certain amount of leeway to banks.
So let me break this down for our viewers. SLR and CRR, the credit reserve ratio and the statutory liquidity ratio.
Correct.
This is money that you have to set aside.
Correct.
Out of every 100 rupees of deposit you take, whatever, 10 rupees
Correct.
you have to keep with RBI in some form.
It's not available to lend.
You can't lend it out.
Yeah.
And so it's a cost to you.
Yes. So that is an additional benefit that banks are get and are able to obviously either price it in or have that available to lend to people.
So basically here every $100 you get, 100 you can lend out. There is no SLR, there is no CRR. Fantastic.
Correct. The only cost the bank has to bear is the hedge on the interest that is payable. So assuming IDFC First Bank is paying 6.75%, on that interest, that hedge cost the bank has to pay. So most banks would have probably, done an evaluation of what is the price they can pay for dollar deposits, and I would assume most banks would try to price it close to the INR funding, so that there's an equivalence available,
Yeah.
right? And basis that, you'd have seen banks offer deposit rates between say 5.5% at the lower end to as high as 7.1, 7.2% on the higher end. But I think, yeah, between 6 to 7% is where most of the banks are as we speak.
On the FCNR.
Correct. And this is on US dollars. There are, yes, some banks are offering pricing in other currencies. But in my experience, 95% plus normally is in US dollars. So I think that's even for us, IDFC First is only offering US dollar deposits. We're not offering a price on or a rate on other currencies right now.
What is your rate for US dollars?
So we're offering 6.75% from 3 years to 5 years. So we have a single rate that's available for all tenors, which we believe is very competitive and attractive to NRIs. Some banks have decided to offer different rates between 3, 4, and 5 years. I think IDFC First has always believed in simplicity, saying, okay, fine, what can we communicate most easily to customers?
6.75.
Yeah, right.
ये तो रुपीस में भी नहीं मिलता.
It's a very good point. In fact, our savings account rate, which also is higher than most banks in India.
You were known for your savings
Yeah,
account rate.
yeah. We are paying 6.5% in INR terms, right? And our deposit rates are also, obviously a little bit higher, but not significantly higher than our savings account rates. So 6.5% on rupee savings and 6.75% on a dollar fixed deposit. I think it's a very compelling and interesting proposition for NRIs.
Congrats to all my NRI friends. You have done well for yourself. Okay, so this is the box standard FCNR deposit that's been there for a long time. Just one thing that we should tell our viewers, that you can't do it for less than 1 year. FCNR deposit needs to be more than that. You can have an FCNR savings account, no?
Under the RBI India regulations,
No.
it's not possible.
Okay.
Right? So you can't have a dollar savings account in India, but that has changed with Gift City. Now, after Gift City came into being and banks started setting up operations there, Gift City allows you to offer both savings accounts and deposits in any currency that makes sense for you. So IDFC has launched savings accounts in US dollars in Gift City. We pay 4.5% monthly savings interest. So just like we pay monthly savings interest on a savings account in India, technically you keep your liquidity in US dollars with us in Gift City and you get interest every month, right? And 4.5% is also attractive for a liquid, no lock-in, no currency depreciation, no tax in India. And the most interesting part is that we allow customers to open this account through a single click on a mobile app. So you have an IDFC mobile app to access your NRI accounts. You click a button and you swipe right and you open an account instantly. And then you fund the account from overseas or from India. And most importantly, what happens is that you can actually, through your mobile app, send money to any account overseas in USD with no conversion charges, no remittance fees. And it's not instant, but technically it happens either the same day or the next working day. So you're sitting anywhere in the world, you have money earning 4.5% dollars, and assuming you have liquidity requirement in anywhere else for any expense, you can, we have customers who are paying credit card bills from the Gift City account. I mean, the dollar credit card, right? So I think they're using it for whatever they need anywhere else in the world.
Do you issue credit cards?
No, we don't issue credit cards in Gift City. We issue credit cards in India, obviously. In Gift City, we are in the works of working on a debit card. So a debit card should be available in Gift City in US dollar terms. That's something that we're working on, which will give you greater flexibility to use your account. And I think customers like to see a physical manifestation of their bank. Sometimes the debit card is that.
Yeah, it is.
So we're working on putting that together and really launch it shortly.
And you have FDs in Gift City also.
Yeah, so that's an important point. So like in India and dollars, you only have a dollar deposit. There's no dollar savings account. In Gift City, the option is there for both savings account and deposits. And the good part is that Gift City's framework is built in such a way, and our internet banking is built in such a way that you can actually move money from savings account to deposits and back on the app itself. And another interesting point is there's no lock-in or there is no minimum tenor. So you get a deposit from 7 days onwards in foreign currency
Unlike India, where it has to be 1 year.
So India, there are two parts. Your FCNR deposits, by definition, 1 year is a minimum tenor. So assuming you book a deposit today and break it in 6 months' time, you don't get any interest. That is point number one. Point number two is that, but there's no lock-in. So technically, you have the right to break the deposit, but you cannot
Get
earn
the
interest. The new scheme under this RBI swap window, there's a lock-in of 1 year. which basically means that while the deposit tenor is 3 years to 5 years, you are not permitted to break it at all within 1 year's time. That's the first point. Second is, if you break it before 3 years, it is possible. However, you will not get the price that you were promised for the tenor, right? Assuming, let's say, an IDFC First Bank, the rate is 6.75% for 3 years, but the 2-year rate is 4%. So if you hold it for 2 years, we'll pay you 4% for 2 years and not 6.75%, right? So
There'll also be a penalty?
IDFC First Bank doesn't charge a penalty for withdrawal right now. But I think more than the penalty, it is the fact that you should only get into it if you feel that this is money I can set aside for 3 to 5 years time. This is even vanilla. Forget about like the leverage for a minute, right? Because I think it's important to understand that fixed deposits work if you largely use it for the tenor that is there. A bank like us does allow what is called partial prepayment. So assuming you need liquidity, you can break part of the deposit. So that's one option that's available. But largely, it makes sense to consider money you can set aside for 5 years or 3 years, which you don't need access to.
Yeah. So very quickly on the GIFT City vanilla FD rates, are they the same as FCNR?
See, some of the benefits that are there for FCNR is not there on GIFT City.
Right.
So obviously, we are not able to offer 6.75%. We offer rates similar to a savings account, but between 4.4 to 4.6, 4.7. But that was, like I said, competitive and attractive till maybe end of May, early June. Again, post this window, maybe attractive again.
Which ends on 30th September.
30th September, correct.
As of now. Okay. So let's get into the leveraged FCNR. And for those of you who don't understand what leverage means, it means you as the customer, you are borrowing money either from the same bank with whom you're depositing money, which is extraordinary to me, or you're borrowing it from another bank with whom your bank has tied up. So Zia will explain that interesting route. But just to make the point that leverage means you are borrowing, and the reason why borrowing makes a difference to your life is because then the return shoots up. So a 6.75% kind of return goes to 15. In some cases, there are banks offering 19 times leverage. Of course, with them, the spread is a little bit lower between the deposit rate and the lending rate. So roughly 15% is what I've seen in the market in terms of what this new FD is offering. But yeah, tell us more about the leverage FCNR.
Yeah, I think Neil raised a very, very interesting point. There's so much noise about leverage FCNR over the last month and a half. So I think leverage is fundamentally, as you mentioned, ability to borrow at a lower rate and then invest in a product that offers you a higher rate. Right? It seems a bit counterintuitive, but has been done fairly successfully by banks in the NRI space multiple times over the last 15-20 years. Right? Especially last 2013-14 in the last window.
Yeah.
I think the banks raised 30 billion plus. A lot of it came through leverage. Right? So I think it's important to understand the arbitrage, right? The arbitrage is that the rates that are offered by banks in India are potentially slightly artificially higher because of some of the benefits that are available. Similarly, banks overseas are also want to lend, let's say, dollars, right? So there are certain target costs that they have. Now that target cost of lending technically is lower than the deposit cost here. So it makes sense for a bank with an offshore balance sheet or for an overseas bank to say, hey, I'll make dollars available to you at a rate X. That X is lower than the deposit rate they're offering. Assuming you keep a spread yourself or you don't keep a spread yourself and offer it to your customers, then that customer technically is able to have what is called a leverage kicker. Right? How does this leverage work? Now, let's say, take IDFC First Bank example, we offer 6.75% on a deposit, right? On a 3-year compounding basis, it comes to about close to 7.5, 7.6%, right? Because FCNR deposits compound every 180 days time. So if I'm able to, let's say, offer a loan to a customer at, let's say, 6.15 or 6.2%, right? That is a 50 bips difference between the deposit rate and the lending rate. Now, assuming, as you mentioned the word times leverage, assuming offer 9 times leverage, that means for every $100 that you bring, the bank will make available $900 to you at a rate lower than the deposit rate. So the difference in the two rates, you multiply by the leverage times. So let's say 50 into 9 is 4.5, right? So 4.5 plus 6.75, right? Plus the compounding yield comes to about 12 to 13% on average, right? So that's how the maths works. But yeah, there's more to it than the Excel sheet, right?
So let me approach it from a skeptic's point of view, and I've got a lot of these replies on social media. So let me begin with the first skeptical point of view, which is why is the bank lending money to me? I may not be that credit worthy. I may not be able to stomach 9 times leverage in a normal life situation. So how is this happening?
Yeah, so there are two parts to this equation. One is the bank, one is the customer, right? From a bank point of view, it's a fully secure loan, right? In the sense that the money is not going to the customer, the money is going to the bank to create the deposit. There's a lien on the deposit. And how it works is that on maturity, the loan amount and the interest due is deducted, and then the balance is paid to the customer. So the customer doesn't need to do any interest servicing, he doesn't need to pay any EMIs, right?
This is important.
Right.
People keep
Yeah,
thinking EMI
yeah.
padega yahan pe.
The term they use is what is called a fixed term facility. So let's say you have a 3-year deposit, then the bank will offer you a fixed term facility, and the payment on maturity is what is called bullet, right? So normally all of us pay EMIs every month, every quarter, etc. Here there is no interest servicing required. So there's a calculation that says, okay, you book your deposit is $1 million. It comes to, let's say, 1.4, 1.5 million on maturity, 1.3 million actually, closer to it. Your loan of $900,000, when you add up the interest for 3 years, comes to about 9.7 million, for example, right? So then you subtract the interest and the
You mean 0.97 million in this example?
yeah,
1.3.
right.
Yeah.
So what will happen is that you subtract that, and then the entire loan plus interest is first paid off. So the loan is settled, and the balance is paid to the customer. So then what he says is he calculates his return on only his equity, right?
Yeah.
Which is, let's say, $100,000 in this case, right? So that's how the simple yield of 14, 15, 13% kind of comes up. I think it's a great proposition for customers. It's very good, but there are a few things to keep in mind.
Yes, I'll come to those.
Yeah, okay.
Just to answer the point, the reason why the bank is giving, say, an individual like me 9 times leverage or 19 times leverage is because there is an FD on the other side of it, and that FD is marked lien. So it's they can take money from that FD and settle
Correct.
the loan in question.
Correct.
And it's really interesting because people are used to home loans. And home loan calculation में अगर आप 1 करोड़ का घर ले रहे हो तो आपको 60 लाख का लोन
80
मिलेगा,
लाख सब, हाँ,
80 लाख का लोन मिलेगा. वेरस यहाँ पे आपको आप 1 करोड़ का डिपॉजिट, मतलब आपका कैपिटल 1 करोड़ का है और आपको
9 crore.
9 करोड़ मिल रहे हैं. सो दिस इज व्हाट इज हार्ड फॉर पीपल टू
Yeah.
get their heads around.
Yeah.
In fact, a lot of NRIs who are probably contemplating buying homes suddenly have switched to this. So that is one point on the frequency and the EMI situation. The second really important objection that I hear on social media is ki, what if the lending rate gets increased? I'll go bankrupt. What do you say to that?
Yeah, so I think how these products are structured is that there is a guaranteed lending rate, right? So the bank is taking liquidity or taking a loan at co-terminus with the tenor of the deposit, right? So they need to have, let's say, 3-year money available, and the 3-year money they've probably priced in either through interest rate swaps or through some other method, wherein they are bearing the risk of interest rate moving up and down, or they've already factored that in the cost, right? So you may look at US Treasury rates or rates overseas and say, why is the lending rate of a bank so high? But the bank would have ideally factored in those costs and say, hey, I'm offering you 6.15% loan. That is the guaranteed price for you for the tenor of the deposit, irrespective of which way interest rates move. This is what you will pay. It's not a floating rate loan, right? It can't be repriced. It's a fixed price loan, and the bank has factored in the cost of offering a fixed price to the customer before offering it to to the NRI as an option. So there is no risk, or there should not be. At least the term sheet that, let's say, banks that I've followed, all of them are fixed rate loans.
That makes me wonder, Zia, why have the customer in between? Let's say you have bank X who's willing to lend to you, another bank in India. They can just lend directly, no?
It's a very interesting point. I think the scheme has been designed in such a way that it's only available for FCNR B deposits. FCNR B deposits only available for NRIs. It's not for FPIs, not for entities, not for overseas bodies who want to invest in India. So those you can invest in the Indian bond market, right? But that is as per market rates. Now, the only option available is that A, you need to be an NRI, B, it has to be an FCNR deposit. Both these can only be offered to a certain segment and by banks, right? So it is and because the benefit to the bank is there on pricing and SLR, CRR and the swap cost, banks are keen to raise more money, right? How do you raise more money? Because client capital and client equity is limited, right?
Yeah.
So then this is the method available wherein, okay, fine, I will raise money at a lower rate and I'll
Yeah.
enhance the return, and hopefully, and finally, what's happening is that the amount of dollars coming into India, forget India for a minute, just think of the bank, right? I mean, we are talking of, let's say, figures of, let's say $50 billion, just say a rough figure. That is 5 lakh crores,
Yeah.
right? If I've got the maths correct. So if you look at the balance sheet of many banks, no, that is larger than the balance sheet of a medium-sized bank right now, right? So most banks have 5-6 lakh, or maybe it's a little smaller size balance sheet. That's the current size, right? So you could technically get 30%, 20% of your balance sheet through this route. So then, and this is theoretically going to, let's say, allow you to not necessarily have to bid very strongly for bulk deposits, right? Which is normally at a higher price, right? So banks are keen to build balance sheet, so they will then fund the asset growth for next 3 to 4 years time.
Two excellent points. On the first one, I still maintain that had the RBI said domestic banks can just directly raise money from overseas banks, बीच
And
में
give the
NRI
same
की
benefit.
जरूरत नहीं
Yeah,
है,
yeah.
it would have been probably a more efficient way. I'll not expect you to comment. I'll maintain that from my end. One important addendum to this, you said NRIs, that includes OCIs
Yeah, yes,
also,
correct.
right?
So NRI, there's a definition under FEMA what an NRI is. So NRI is either a Indian citizen or Indian national who is residing overseas. Residing means you stay for a period of time, or it is a foreign national of Indian origin. Now that definition is now what is called overseas citizen of India,
Yeah.
right? Because that's the new document that's available. So an OCI or a person of Indian origin who has an OCI
PIO.
card. Yeah, PIO was the old definition, right?
Now it's OCI.
Now it's largely OCI is the all-encompassing definition. Has every right as an NRI to participate in the India story, either through bank accounts, property purchase, even inheritance, right? Many people who moved overseas have assets or things in India they need to deal with. So that doesn't matter. And I think many people with Indian passports have traditionally taken opportunity of citizenship in the
Yeah.
US, in the UK, Europe, and maybe Australia, for example, right?
Yeah.
So
But
that's not a challenge.
Yeah, but it's important to highlight because people
Yes,
think that
correct.
once their citizenship changes,
Yeah.
they can't do this, but they
Yeah,
can
correct.
if they have OCI. Okay. Now, I want to come to two very important risks for NRIs in all of this, both of which are to do with tax. So, the first is that if the NRI comes back before the deposit matures and they become a resident and ordinary resident ROR, because the intermediate status, which is RNOR, is still okay.
Correct.
You will not be taxed in RNOR status. Then they will have to pay tax on the interest that is accrued after they become ROR.
Yes.
I assume the banks will not deduct TDS once somebody becomes ROR.
It's a very good point. I think so. FCNR deposits normally TDS is not deducted, right? But and the good part about FCNR deposit, it can be maintained till maturity, original maturity date, even after your status changes to resident Indian. So let's assume a 5-year horizon, right? I mean, if you intend to come back to India tomorrow, then don't book a 5-year deposit, book a 3-year deposit, right? I think it doesn't make sense to do that because you don't want to be paying interest on this after you become a resident Indian, right? So I think you need to be a little bit cognizant of your own situation and take a call whether that makes sense to you. To answer your point, no, TDS will not be deducted, but that doesn't matter. Finally, you need to report your return. Your deposits that you're booking is reported under AIS anyway, right? So every deposit that you have is already part of your returns. So I think it just makes sense to talk to your CA and check how to pay tax on the interest that you earn. But you need to factor that in before deciding to get into the product.
Okay. So one objection, like I said, or one risk for NRIs is when their tax status changes. Another risk that I've heard about is that when people's tax status changes to resident, the lending bank can call in the loan. As in, your deposit is not matured, but your loan has been called in, so suddenly you have a mismatch and you can go bankrupt.
I read about this, but I think my understanding is that just like, see, one is RBI in India, second is the foreign bank, right? A foreign bank doesn't have any rule about whether resident Indian or not. It's their call whether to lend to you. That's a call that they've taken. Second is that my understanding of the rule is that if you have taken an asset while you're overseas, you can continue to service the asset while you return to India. There is no RBI rule that I am aware of that forces the customer to close the loan, right? If some bank is taking the call, they won't offer it. That's the bank's call, which is not a call that we have taken.
Okay. Many of the banks are offering these loans to the Gift City
Yeah,
branches,
yeah.
which is not technically a foreign bank. Will they be under an obligation to call in the loan?
The same rule will apply, right? I think so the way I look at it, whether Gift City is an overseas branch, the way we look at it, and that loan will continue till maturity.
Okay. Now, many NRIs have money, of course, in foreign currency, but they also have money sitting in NRO accounts, NRE accounts. Now, let's address this account by account. So, as an NRI, one can move money from NRE to FCNR,
Yeah.
no problem.
Correct.
Of course, you are switching currency, so
Yes.
there will be
An
a
FX conversion cost.
FX conversion cost. For NRO to NRE, you have to get a certificate, 15 CB certificate that you've paid taxes, but you can remit up to $1 million every year and then move it to FCNR.
Correct.
Or can you directly move from NRO to FCNR?
Yes, that's a good point. I think what happens is that operationally, what banks are doing is they're doing NRO to NRE first, or they're doing NRO to overseas, right? Could be NRO to Gift City, for example, and post that, you can decide to move it into an FCNR deposit. I think there are certain rules with respect to what are permissible credits in FCNR deposit. Some banks have taken a call that you cannot move NRO to FCNR directly. So that's more an interpretation each bank has taken. So yes, I think to address your point, NRO money is what you earn in India, right? Whether it is rent, whether it is dividend, whether it is anything else. And there are two parts. There is capital account and capital income and current income. So on capital, there is a 1 million limit per financial year. Let's say property sale, for example. But things like current income, rent, dividend, there is theoretically no limit. You can actually, even interest that you earn on an NRO account, all that is considered to be current income. So
Or
that
mutual funds and stocks.
mutual fund is all capital. So basically, once you redeem, it's a capital transaction, right? So all that whatever involves an asset movement technically, and that's just a very simple definition. A current capital account has got more.
That has a $1
nuances,
million limit.
right? So that is a $1 million. Property sale is the biggest one normally, or let's say something on inheritance. That's where normally you kind of sometimes
You get stuck.
need to do it over 2 to 3 financial years. There's no
Yeah.
obligation. You can keep the money in an NRO account forever.
But for current, there's no limit.
Current account, there's no limit.
But you have to segregate how much is coming.
So I think every bank will do that, or will expect you to show evidence of credits into your account being either current or capital, right? So I think banks are obliged to check that the money belongs to you. So let's say this property sale, they'll look at the sale agreement, etc. Or if there's an inheritance, they'll look at the will or transmission, etc. Similarly, if it is sale of assets, they'll look at the mutual fund statement or the sale of shares, etc. So that obligation the bank has to do. So if you just are not able to kind of establish the source, bank may either deny or ask for more clarifications to the transaction. So 1 million is not about the amount; it's about the source is clear.
Yeah.
Taxes, the tax payment is what is done through the CS certificates, right?
Yeah.
But ownership is through the banks has to do the due diligence.
So Zia, a lot of NRIs are poring over Excel sheets right now, trying to compare return bank by bank. And is return the only metric to compare a bank, especially in this situation? Because I see a lot of demand. People are running after bankers like they haven't done for the last 13 years, since 2013. So tell me more. What are the metrics people should look at?
Yeah, it's a very good point. I think return is important, Neil. I think and NRI as a community has always been very particular about money, and they've traditionally always looked at returns and that's why they invest in India also fairly aggressively, right? But banking in India is easy for all of us because we have access to Aadhaar, we have access. We can walk into a branch whenever there's a problem. Most things happen digitally very easily. But you're sitting overseas. You want to be able to be sure that who you're working with in India is available when you need them, and be able to do most things on your own, right? So one is account opening. So account opening, banks have tried to simplify, but KYC still requires attestation of a document if you're overseas, etc. And there are banks that have solved for that. Post account opening, you need to first be able to transact. You need to be able to have an, let's say, a mobile app
Yeah.
or internet banking that gives you access to your account
Mm.
for you to do most things without having to call a relationship manager or your branch. So you need to just check whether your bank is giving that to you, right?
You
Is
don't
the
want a shoddy app.
yeah, is the app intuitive? Does it allow you to create your credentials on your own without having to wait for some paper that could come from the bank? Can you change a mobile number sitting overseas
Yeah.
without having to fill a form, right?
Yeah.
Assuming you move countries, can you change a mobile number from Singapore to the UAE sitting on the mobile app? Can you change your address?
Which you can in your app.
In our app, you can, yeah, you can change. So we have had people who move countries, and then you on the app there's a mobile number change option. You enter the new details. There's a cooling period, and there's some risk mitigations that are there. You can change email address on your app. You can change mobile number on your app.
Physical
You can
address.
change address on your
Yeah.
app, right? And you can do re-KYC on your app, right? Which is the most painful things an NRI is to go through, right?
Yeah, I've heard horror stories, but
Yes.
don't you have to go to the Indian embassy and they have to
So
attest?
now when you open an account, right, obviously you need to get documents attested, right? But once you're a customer, your periodic updations, we allow you to do it
On
on
the
your
app.
own, subject to there being no change. So what happens is in most cases, there's no change in a customer's details, right? So RBI requires you to give a customer an option to confirm there's no change, and basis that re-KYC is considered to be done. So this is an RBI guidance, and we've kind of followed that. Second option is that to also allow a customer of your bank to make a change basis declaration. So you declare a new address, and then we send what is called a positive confirmation letter to you. And if the letter is delivered, then the address gets changed, right? So at the point I'm trying to make is that I don't need to fill a form. I don't need to talk to somebody in India. I don't need to courier documents, right? So, and another important thing is UPI in India, right? UPI in India is available to all of us, but for NRI sometimes struggle. If you have an overseas mobile number linked to your account and you're in those 12 countries, you should be able to use UPI. Is UPI enabled in your mobile app? Does it happen automatically when the app is set up? Can you sit overseas and make a scan QR code or a e-com transaction
In India.
someone in India while you're overseas, right? Because your family members in India,
Yeah.
you're trying to do a payment, they want some UPI handle. So you need to control it overseas, right? I think that's very, very important. Fundamental foundation of your account has to be set up well. And you need to have options both in India and in Gift City, right? So India gives you your rupee deposits, rupee accounts and FCNR. Increasingly, NRIs are looking at dollar liquidity, right?
Sure.
So I think this is fundamentally there. Once that is in place, then you see whether which bank gives you a better return, etc.
Okay. So Zia, 2 points on KYC. One is that when you open a fresh account, is there a easier route now for what typically what your customers do? Number two is Gift City allows video KYC for certain number of countries. So can you tell us more about that?
Yeah, no problem. So we are one of the first banks to launch video KYC for NRI account opening in India. We basically use Aadhaar, OTP, Aadhaar eKYC, and you can open an account. We launched that last year. And NRIs who have an Aadhaar and a mobile number linked to the Aadhaar, they're able to do that journey completely online without meeting anybody. And the video KYC agent does your KYC. And you need to be in India for that. Your IP address has to be in India.
You need to be in India for that.
That is the current RBI guideline on
Or at least घर में बैठ के तो कर सकते हैं.
Yes, right. You are right. Gift City has enabled video KYC for NRIs while they're overseas. They follow the same Aadhaar framework. You need to have Aadhaar and OTP, and then you're able to do video KYC. We are in the process of building that capability, right? So that should go live shortly. But we also have a process wherein if you're sitting overseas, NRI is either in US, Canada, UK, Europe, Middle East, or they are in Singapore, Australia, right? So we have worked with people who facilitate this for us. In KYC is done either through a notary or through a bank, etc.
Even a foreign notary can do.
Yes, foreign notary, because he should be a notary in that country, because the Indian notary can't do. So we facilitate that attestation, as it is called. And some countries allow what is called video KYC, wherein the notary does a video call with you. So if you're in the US, if you're in the Middle East, and maybe even UK, Europe, you can technically do a video onboarding wherein you show your passport, etc. And then we accept that as an attested document and open the account. Middle East allows lawyers to do it, certain type of lawyers. So there again, that option is available to you.
Yeah.
So that's to open an account.
Yeah.
So account opening, there are 2-3 paths. One is you get their documents verified either through video or in one person. Then the form comes in. We have fully digital account opening. You can fill a form online. Account opening can happen in as less as a day sometimes. Post account opening, again, we do a confirmation on the address. We send a welcome kit to you, or we send a letter to you. If the letter is delivered, we consider that one additional check. And then we require funding, wherein you need to fund the account from your own account overseas. So these three triangulations basically allow us to set up a fully KYC account for you. And post that, you use the account. You download the app and you're good to go.
And because of account aggregator, you will show the customer their
That is
investments across
that's a very
all.
good point. Yeah, I think we've enabled an account aggregator on our app quite seamlessly. You're able to see your balances across multiple accounts. You're able to see net worth, as you're aware. You can basis your CAM statement from investments through another broker. You're able
Yeah.
to see everything together. So that and I think there's a reason. Even Forrester has recognized us as the second best app in the world. I think other than BBVA. Globally, there is a recognition of what we have built, and I think your customers are recognizing it.
Yeah, yeah. I mean, I'm certainly happy with your app. Uh, and it's the compliment to you, but I have not been to the branch since the day I opened the account. It has saved me a lot of effort or annoying trips.
No, I think it's a
Yeah.
very important time is of essence. No, right now what happens is that you don't really have time. If you're able to do it smoothly, I think branches are important because it gives the brand comfort, right? Right now we're opening most of our accounts online. I think whatever
Yeah.
accounts we open every month, large proportions open online because the brand has built that strength of the last 4 to 5 years time, right? People and they see a branch and they know they can go to a branch if there's a problem. So that comfort is there. So it's like a backstop for people when they consider opening a new account.
Yes. Finally, on leveraged FCNR, I just want to say this that it matters very much which country you live in because, as there was an article in ET this morning, um, if you live in Singapore, Singapore imposes a 10% withholding tax on the interest that you will be paying the bank that's lending you money. So that can cancel out your return a lot. Just to be aware of that. For US, the interest that you receive is fully taxed by the US, and they have a withholding tax as well of 30% on the interest that you pay. So, really, if you're in the UAE, Middle East is where NRIs have a very smooth ride.
Correct.
Would you
No,
agree?
I think it's right. I think it's something that the Middle East and have done also in the past, right? If you see historically last 2 to 3 decades, most transactions happen from the Middle East. Singapore also, I think, while there's clarification, I think each NRI can check with their respective CPA and understand what the implications are. Because one is on the tax side, the return on its own is quite attractive, right? So yes, taxes is a factor. UK is very clear. I think UK we more or less not seen any inquiries because your status impacts your tax very badly, and you need to pay tax on the entire amount. So taxation is a factor. I think, and like you've already covered, returning to India, that can impact your taxation going ahead. But it is simplest in the Middle East. Other countries you need to probably check and see whether it makes sense for you or not.
Absolutely. Yeah, thank you so much. It was lovely having you.
Thank you so much, Neil. My pleasure.